Since August 10th of 2020, MicroStrategy has bought about $8.3 billion worth of Bitcoin, and Bitcoin's up 44% a year on average since then. The S&P is up 12%. And since we levered it, we're up 825%. The number one performing stock in the S&P is NVIDIA, up 821% as of Friday. So we beat every single company in the S&P index using a Bitcoin strategy.
Michael Saylor's MicroStrategy has developed one of Wall Street's most fascinating financial strategies to buy Bitcoin. The company issues convertible bonds, which are a type of debt that can be turned into MicroStrategy stock if the price rises enough. These bonds are highly attractive to investors because they offer two big perks: the potential to convert into stock for a profit and the safety of earning interest while holding priority in bankruptcy. Here's Tom Lee, a prominent Wall Street strategist, explaining this.
MicroStrategy, around 5 years ago, transformed the company by using its balance sheet. They had a lot of cash on hand to buy Bitcoin. And so instead of the stock being valued on its actual software business, which had been languishing, it's valued as a holder of Bitcoin. But as Bitcoin has risen and MicroStrategy stock has gone up, it's created an opportunity for them to issue convertible bonds and debt to acquire more Bitcoin. What's been novel is that they've issued these debt securities for almost no interest cost, essentially zero interest bonds. And so they're funding this without having to actually pay for the interest expense. They're doing this with the ability to borrow at very low cost. You might wonder, why are bondholders buying these bonds? They're offering for the first time the ability for someone to put $1 billion of work in the bond world to own a bond that has exposure to Bitcoin. These have been incredibly high-performing bonds. They've been the best performing bonds, so they've helped bond managers outperform by buying typical corporate bonds, but then with this upside in crypto.
MicroStrategy, in turn, uses the cash raised from these bonds to purchase massive amounts of Bitcoin, over $40 billion worth so far. So why are investors willing to accept low or even zero interest rates on these convertible bonds? It's because MicroStrategy stock is incredibly volatile, moving 5.2% daily compared to the S&P 500's 0.6%. This volatility makes the bonds conversion option much more valuable since the stock price has a better chance of hitting the conversion level. Here's Saylor explaining this in his own words.
I mean, like, most of our debt is convertible debt. So we borrow $1 billion for 5 years for 0% interest. There's no margin call possible.
Who gives you $1 billion for 5 years at 0%? Is that when money was cheap?
Convertible, actually, they still do. We borrowed $1 billion 2 months ago at 82 basis points. And so the way it works is we're selling convertible bonds. And the convertible bonds have a bond component, and then they have an option component, like a call option. And so the convertible arbitrageurs and the options traders, they like the volatility in the stock. You know, one thing you might not know is we have the most volatile stock in the S&P 500. So if you took all 500 stocks in the S&P 500, you said, which is the most volatile? Like, we're like 100 vol. The S&P, the VIX is like 15. You know, most of the Mag 7 stocks, they would be like 20, 25 vol. Bitcoin is 50, so it's like 3 to 4 times the volatility of the S&P index. MicroStrategy, we lever the Bitcoin, so we get 2x that, so we get to 100. And conventional investors are afraid of volatility. They fear it. They're like, I can't handle the volatility. But volatility is like RPM in an engine. It's like spinning at 100 RPM instead of 10 RPM. So if you plug volatility in the Black-Scholes equation, the options are a lot more valuable if you have volatility. So when I'm selling a convertible bond, it's got an option attached to it. So if you're an investor, you want to buy a convertible bond from a company with large volatility, large liquidity, and durability.
This strategy has made MicroStrategy the largest issuer of convertible bonds globally, and the company plans to raise another $42 billion over the next 3 years to keep buying Bitcoin. But Wall Street isn't just investing, it's arbitraging. Hedge funds like AQR Capital and Man Group are playing both sides in a strategy called convertible arbitrage. Here's how it works. They buy the convertible bonds for the equity conversion feature, but at the same time, they short the stock, which means borrowing and selling the stock now, hoping to buy it back at a lower price later. This works because the bond price and the stock price are linked but can sometimes fall out of sync.
That said, who the hell is buying these? Who's buying them? They said, why would anyone buy them? They have 0% interest.
Another group of investors are convertible arbitragers. They actually buy the bond, short the stock, extract sort of a risk-free premium out of the instrument, and they can only do that with a convertible bond. They can't do it with equity, and they can't do it with Bitcoin.
If the stock drops, the hedge funds profit from their short position. If the stock rises, the bond's conversion feature becomes more valuable, allowing them to profit from the mismatch. It's a clever way to hedge their bets while exploiting the volatility that MicroStrategy pitches as a selling point.
Done to try to earn a return no matter what the market environment is. It sounds sometimes like a black box to a lot of people, but really at its core, it's relatively simple. You're buying a convertible bond and you're shorting the company's stock against it to try to create an equal return whether the stock goes up or the stock goes down.
This strategy creates a self-reinforcing cycle. MicroStrategy's Bitcoin purchases increase its stock volatility, making the convertible bonds even more attractive. That demand allows the company to issue more bonds at low interest rates, raising more money to buy Bitcoin, and the cycle repeats. As long as Bitcoin's price keeps climbing, the system thrives. Saylor also explains how Marathon, a Bitcoin mining company, is also using convertible bonds, specifically with a 55% conversion premium, allowing bondholders to convert to stock if it rises 55%. These bonds pay 0% interest, leveraging Marathon's volatility in Bitcoin holdings to attract investors seeking upside potential.
You told me it's 55% premium over conversion, but a zero coupon. Is that the same?
That was a zero coupon 55. And you can do that because Bitcoin is high vol, and the companies that have Bitcoin on their balance sheet have even higher volatility. So Mara is a great example. 2 weeks ago, they did $1 billion convert, zero coupon to buy Bitcoin. This week, they're back in the market doing another $1 billion convert, zero coupon to buy Bitcoin. You can rinse and repeat that frequently.
But there's a risk. If Bitcoin's price falls significantly, the entire system could unravel. The stock price would drop, reducing the value of the bond's conversion feature and making it harder for MicroStrategy to refinance its debt. At the same time, the company's massive leverage tied to Bitcoin could threaten its financial stability. It's a high-stakes gamble that works great in a bull market but could collapse in a crypto bear market. In the end, this strategy is as bold as it is risky. MicroStrategy's Bitcoin bet has captivated Wall Street, with hedge funds finding clever ways to profit along the way. But the question remains, will this perpetual motion machine keep running, or will it collapse if Bitcoin stumbles? Saylor argues that investors have accepted the risk and want the increased gains that come with the leverage.
So what do you say, though, to those who say there's a risk here? Because this is effectively a levered Bitcoin position. And if, in fact, Bitcoin goes down, this becomes a much more complicated situation.
Yeah, well, the number one risk you take is the existential risk that Bitcoin has an extinction level event and goes to zero immediately tomorrow. But every long investor in MicroStrategy is a Bitcoin maximalist or a Bitcoin believer. They've accepted that risk. Once you accept that risk, what do we expect? We expect it's going to go up 29% a year for the next 21 years. It's been going up 60% a year. So the people that are buying the equity are buying the equity because they want 2x Bitcoin, they want 2x vol. And once you accept that idea, you can see, over the last 2 weeks, Andrew, we've generated $5.4 billion in BTC gains. We're making $500 million a day. I'm staring at my screen and we're selling dollar bills for $3, sometimes a million times a minute. And so it's not impossible. I mean, we may very well be the most profitable company in the United States, growing the fastest right now, because there's not many companies that are making $500 million a day doing what they're doing. If you don't like Bitcoin, you don't want any piece of it. But if you like Bitcoin, then this is a monster for you.
Let us know what you think in the comments below. Thanks for watching, and please subscribe if you enjoyed the video.